we're going to talk about dealing with deposits and retainage. So the reason why we're going to be dealing with deposits and retainage is because we're going to invoice a partial payment for the job based on maybe the contractual agreement, right? So let's say we agreed with a customer. Let's just do better. Let's create an estimate and make it from there so we can explain everything from the estimate. So let me create another job here. Let's call it the Miami High School. Okay, let's say we're going to build a high school. Okay, kind of ambitious here. So we're going to build a high school, and what we're going to do is we're going to have a couple of items here just to simplify. Let's say we're going to do a we're going to do a demolish job. We're going to do labor, and we're going to do materials. I said the whole thing is going to be broken down like this: a demolish job, labor, and materials. And let's say, for the heck of it, for materials, we're estimating $500,000, right? So we're going to put under materials $500,000. So we're going to put 500,000. And this is my estimated cost, by the way. We always work based on estimated costs. And let's say for labor, it's going to be 750,000. And let's say the demolish job and trash and get rid of all the debris is 150,000. Okay. So first thing is, and this was part of part one of the webinar, when you enter a rate in the estimate, this is always a function of cost. This is how much I think it's going to cost me. It's how much I'm planning to pay to get this job done. And then the markup is how much you want to make on it. So let's say we want to make 20% markup on this. So all we do is we add 20% to the markup. Okay, and then we'll keep doing 20% to the markup. So I have to put 20 and the percent, 20%, and then 20% to the markup. Okay, and to be clear, markup is actually a number that we don't use in the construction business. Mostly we use margin as the one. Margin is particularly important when it comes to the percentage of completion method. Margin is everything, by the way. So markup is not. Margin it is. So when you look at this subtotal and markup, this is telling me that I plan to pay 1.4 million, and I'm planning to have $280,000 in margin, and this job is going to be $1.6 million. Okay, that's the whole job. Now let's say that we are going to account for this in the percentage of completion method, but they're going to pay me in 4 phases. Okay, so I'm just going to put it in the description here, and I'm going to type here payment schedule. Okay, so they're going to pay me in 4 phases. Okay, phase 1, they're going to pay me, let's do here, phase 1. Phase 1, they're going to pay me, let's say, $600,000. Okay, phase 2, they're going to pay me $480,000. Phase 3, let's do phase 3, it will be $300,000. And phase 4, $300,000. So this is not a percentage-based contract. This is a contract in which we decided contractually this is how they're going to pay me. So this is a contract-based phase payments. This is not work in progress. This is not progress invoicing. It's none of that stuff. This is contract-based payment schedule. So I'm typing it here just so we can have just kind of clarity around how is it that we plan to get paid. Now, I'm going to go ahead and click on save. Okay, so there's my proposal. Okay, when I go to reports and I go to job time and mileage, and I got job estimates versus actual summary, I will see all of my jobs, and I currently see Miami High School is an active job, and I'm planning to pay $1.4 million in this, and I'm planning to get 1.68 as the amount of income that I recognize. Now, I want to recognize my income based on my percentage of completion, not based on the phase payments. If I invoice it, this is where most people make the mistake, right? If I invoice this, I'm gonna hit save and close, and I invoice this as a percentage, which is a function of my phase payments, which in this case would be 600,000 divided by 1.6 million, right? Because 600,000 divided by 1.6 million is exactly 35.714%. So 600,000 divided by 1.6 million is 35.17%. I don't want to do this. I want to emphasize this. I don't want to do this because this is not the type of accounting that we want to run. We don't want to recognize income as a function of how we get paid. We recognize income as a function of how much the job has been completed. Okay? And because of that, then we don't do progress invoicing on percentage of completion jobs, or at least if you want to have a proper percentage of completion job. So what you do is you're going to create an invoice just for the $600,000 and recognize it as a deposit. So I'm going to go into customers. I'm going to go into create invoice. I will put Miami High School. I won't select an item from the estimate, hit cancel. And then I'm going to have an item code called phase payment. So I create an item called phase payment. I'm going to make it an other charge. And then I'm going to put it into an account called customer deposits, which is a liability account. Okay. You could also put this in a work in progress account. Some of you might do that, but I think it's just easier to put it in customer deposits. I think it's visually just much better to look at. So I'm going to go to customer deposits and hit OK. And then I'm going to put here 600,000. So I'm invoicing a phase payment, which is a deposit, simply just a deposit. Okay. And description, I'll put here phase one based on contract. Okay. And let's say this payment is on the 14th. I'm going to hit save. Okay. So when I look at my my reports here, this time I'm going to do the job estimates versus actual detail. I'm going to pick my Miami High School and hit OK. Notice that I separated my other charges from my services because I want to make it very obvious that this is revenue, but this is not recognized revenue. So it is revenue, but it's not recognized revenue. What does that mean? That means when I go to my profit and loss report, and let's put the 14th, which is the date of the invoice. When I go to profit and loss report, I have no income because I didn't make 600,000. I received a partial deposit of 600,000. And the challenge with this is that a lot of smaller construction companies just don't have the discipline to go through this whole process and remember that they're not going to actually invoice individual items on the estimate because this is how a percentage of completion method works. Okay. So, and then let's say we're going to make the expenditure. So let's say, for example, I'm going to pay for the materials. So let's say I get a bill from my demolishing company. So we have, I'm going to create a bill from my demolishing company. So give me a second. Okay. So bill, and let's say we have demolish and clean company, and they're going to charge us for demolition. And notice that I'm using an item, and we covered this quite a bit on the phase one, on the part one class. I'm using an item and not an expense account. So I'm using the item, and I'm using the demolition and trash item. And in this case, I'm going to get, let's say they're going to bill me for 75,000. Okay, so they're billing me for half of it. Now, what you can do in order to know that they're billing you just half of the contract you have with them, and this is an option, it's up to you. I mean, it doesn't really make a difference. But instead of putting 75,000 there, you can put 150,000. And then on the quantity, you put 0.0. Okay. So assuming that you want to kind of know that, okay, this invoice is for half of what I plan to pay in the future, we'll do it like this, right? Best thing to do, honestly, is to do a purchase order because then that way you will have the original purchase order that you're charging against, assuming that you don't have perfect half payments and this sort of thing. But for now, let's go ahead and do that. And we'll do Miami High School, and we'll take out billable, and we'll hit save and close. Now, what's interesting about this is going to go straight into my expense or my cost, okay? Because the way I set up these items, I set up these items to hit my cost right away. So although we didn't recognize the income on the profit and loss, we are recognizing the cost, okay? We have to do one more entry to recognize the income, which I'll explain briefly, but it's recognizing the cost. Let me also do the materials. Let me go here to vendors and go to enter bills. And let's say we're buying them from Home Depot, probably not practical way to buy materials for big construction jobs, and let's say that we paid, let's say, $476,000 in materials and send that to the job. Okay, so insert multiple bills here, multiple checks, right? I'm just doing one to simplify the process here, and make sure you job cost it, which essentially means you select a job in the customer job. I uncheck the billable check mark because I don't like it, and I make sure I'm doing it under items and not under expenses, and hit save and close. All right, so what we got going on here is when I go into my report, notice that I have my budget of 500,000 for materials. I spent 476 so far. I got a budget left of 24,000. Then I got my budget of 75,000 for demolish, and I spent 75. I still got a budget left, and I haven't charged any of my labor yet. So what you want to do is you want to know what percentage of the job you have completed. So this is a formula. Let me run my calculator just so we can show you. So this is a formula. The percentage of the job I have completed is not the 35% that I invoiced for phase one. The percentage of the job I have completed is 551,000 divided by 1,400. Let me run the calculator here real quick so I can show you. So it is 551 divided by 1,400. That's my percentage that I have completed. Now, that may not be the right percentage per se. When you actually look at the job and you're like, well, that job is not that percent, but that is from an accounting perspective, is a percent that has been completed. So in this case, we're going to do 551 divided by 1.4 million. So what I need to recognize is 39.3571%. That's how much of my job I can recognize as income. So the way I recognize the income is now I'm going to progress invoice that percentage, 39.5, whatever it was. So I'm going to go to my original estimate here. Pull up my estimate. See, now I'm gonna invoice progress invoicing, but not based on the payment I received, based on the percentage that I get to recognize for this job. So I'm gonna click on create invoice. I'm gonna do percentage of completion, and I'll put here 39.5, whatever that percentage was. I'll run it again. Let me get the exact percentage here. Let's be as precise as possible. So it was 551 divided by 1,400, so 39.35714. So 35714. Okay, so this is the equivalent of, okay, that's the equivalent of how much cost I spend versus my budget now being recognized on that. So I'm going to go ahead and hit OK. And this is where it gets hairy. Your customer never gets this invoice because your customer doesn't pay based on how you recognize the income. Your customer gets paid based on phase schedules. So your customer never gets this invoice. Okay, this invoice is for internal purposes only. Okay, so one of the things I like to do is, in order to avoid confusion in the office for my customers that I train with, is I create a template Okay, where this particular template, I will call it recognize revenue. So I'm going to call it recognized revenue based on work in progress. And then I hit OK. Okay. And then what I also do in order to avoid confusion is what I end up doing is when I go into my edits, I take out everything on the print. Okay. So this prevents the user from inadvertently invoicing this. And if they do, it's going to be just nonsense. Okay. Because again, I don't want them to by mistake email the client this. So by doing this, by taking them off on the print, I'm using it just as a mechanism to recognize my, did I leave another one here? Get rid of that. And the footer too. There you go. So nothing. So there's no way to screw this up. So hit OK. So I'm using this document simply and solely so I can recognize my revenue. So if by mistake I have an end user that uses this and tries to invoice this to your client, the client's just going to get a blank, and it's not going to confuse anyone because this will confuse people quite a bit. So we have a difference between a progress invoice, which is this guy here, which is our recognized revenue based on WIP. Let me go ahead and hit save and close. Actually, let me do save and new so I can open it because I have another invoice. Okay, save and new. Let me look at the other invoice. Then on the other side, on the other invoice, which is the one for 600,000, this one I will change the formatting, and I call this one face payment request. So the beauty here is on the mechanics on the item that I'm using, which is a deposit item, and the display and the presentation of it to avoid the confusion between these two. All right, good. So now the moment we've all been waiting for, right, is how much income it's actually being recognized on the financial statement. So when I go to my profit and loss, the income that's being recognized is 661,000, which is the actual amount that I invoiced, which is based on a work in progress. What's nice about this is that you will get consistent margins. So let me show you what I mean by that. So the margin on this job is exactly the margin that you programmed to have. So we talked about a 20% markup, which is not the same thing as margin. Okay, so we could discuss that as well. But a 20% markup is actually a 16% margin. And we may need to explain that as well. But so the reason why that happened was, and let me open my estimate here. So when we had this original estimate that we put together with 20% markup, 20 markup is not the same thing as margin. Okay, my markup is $280,000. Is how much profit I'm making on this, right? So I have to divide 280,000 by 1680 to figure out what is my margin or my gross profit on the job in terms of percentage. So when I run this through my calculator, actually I can run it through here inside QuickBooks so you can see it. So when I just do a simple formula of 280,000 divided by 1.68 million, it's going to give me my gross margin. So 280 divided by 1680000 and hit tab. See, my gross margin, my gross profit is 16.7%. And the way percentage of completion works, the way it works, that's exactly what you need it to happen. You need your projected margin, your planned gross margin to be the one that actually it's recognized as we come. Now, the next step is, how does the accounts receivable look like? What do payments look like? So let's talk about that. So right now in my AR, because I haven't done any receivables yet, but right now in my AR, I'm going to have both the 600,000 and the 661 as my accounts receivable. I'm going to have them both in there. Okay, I should have assumed that when I invoiced the first 600,000, which was the deposit payment, that I was going to receive money for that. So I should have received that. So let's just finish that. So we have that. So we're going to receive payment. Okay, and we're going to receive the 600,000. Okay, because that was the face payment. That was the contractual face payment. So we'll put 600,000. Okay, we select the invoice that had the original deposit in it. That's really how you want to do it, because you have to assume that when you send the invoice face payment, that 600,000 wasn't that 661 wasn't there, just the 600,000 was there. And then we'll go ahead and click on save and close. So now my AR is back to 661, right? Now that's not my real AR, right? My AR is not 661. My AR technically is 61, because when I look at my balance sheet, let's go back here. I'm gonna open my balance sheet. Okay, when I look at my balance sheet, I have a customer payment of 600,000. Okay, so I have a customer payment of 600,000, and I have an accounts receivable of 661. So what I need to do is I need to make sure, and there's a couple ways to create custom reports for this, which we could cover if we have time. But we can create a custom report that shows me my AR and my customer deposit both in one report by customer. So that may be interesting. We'll see if it's worth doing that. But what we want to do is we want to get rid of that 600,000 and we want to apply it into our AR. So the way we do that is simple. We go into our invoice. Well, I say simple, but it's not. but hopefully you have this video as a reference to figure out later, because construction accounting gets really hairy, and it really took me years of practice until I kind of understood how this whole thing works. So on the invoice that's 600,000, so the invoice that's 600,000 flat, that one's paid, right? Because that was a face payment, we got paid, we clicked on receive payment. On the next invoice, the one that's 661, this is my recognized revenue based on work in progress. In here, what I'm going to do is I'm going to now delete this face payment one, or just not delete it, but I'm going to replace it with an item. So in this face payment one, here I'm going to select now my face payment. So I selected my face payment deposit item, or my liability item. So I got my face payment item. And now I just have to copy that so I can paste it. No, I got deleted for some reason. Let me copy and paste this. So I got my phase one payment of 600,000. I don't know why that got replaced, but okay. And I leave the other ones blank, right? The other ones are blank just to let me know that that's still pending. And then in here, I'm going to put negative 600,000. Okay, because what I'm doing is I'm applying to my open invoice that's representing the percentage of completion that I recognized, which is 39.36%, and I'm applying it to the actual payment that I received on the previous phase payment. You also have to remember that this stuff happened at different times. I mean, we're doing all this in a single video, in a single webinar, but you got the phase payment a month ago, and now you're recognizing this a month later. So obviously, it feels clunky. It's like, why are you doing multiple transactions? You could have just done this in the first place and receive a 600,000 payment against it. That's true, but that assumes that I know what how much of it I'm recognizing it for the month or for the quarter or whatever it happens to be. So now my real true AR is 61,000, right? Because that's the amount that is going to be recognized as revenue that I have not collected for. So I'm going to click on save and close. Okay. And now let me run a P&L and a balance sheet next to each other, because I have to put one last finishing touch on this. So I'm going to run a P&L. I'm going to date this to today just so we can have just the transactions that we have today. So there's my P&L. Okay, that's my recognized income. Then I'm going to go to my balance sheet on the right side. Okay, and okay, perfect. So let's say that I wanted to do, I wanted to recognize the difference between what I have received in income. So this is 661 is truly what I have recognized. Okay, 661 is what I have earned. So I want to recognize the difference between what I have earned and how much of it I have over or under billed. Okay, so this is another phase of it. I actually don't do this with uh, my percentage of completion clients because I don't need this. But I have some of the smaller clients that want to get a hybrid method where they kind of want to see how much they have earned, but they also don't want to see in the P&L income that they haven't received. So what I do is I can adjust, and this is optional only. But if I want to adjust that 661 to look like 600 because that's the only payment I receive, then at that point I do a journal entry. I'm not a big fan of it, but I can do a journal entry. So I'll do a journal entry here. Okay, and I'm going to I'm going to create an account called over under billing. Okay. The over under billing is a particular thing to the construction industry where they start by recognizing work in progress and then they remove how much they have invoiced above and beyond what they're recognized and or under, right? So in this particular case, I'm going to recognize the overbilling of 61,000 just to let you know that we haven't gotten that money. So it's one way to get the cash basis modified cash basis approach to look in the profit and loss. And usually these entries are temporary. So we do them only for presentation and then we take them right out. So for this, we're going to do 197.60. And again, this is an optional journal entry only with the purpose. This actually should go in the opposite direction. So that should be a debit and the other one should be a credit. Okay, and then on the second line, I'm gonna have other current asset called AR adjustment for over under billing. This journal entry is 100% temporary. We do it just for presentation. Okay, so it's only when you like this method, trying to convince the client to go with this method, but for whatever reason, they want to have that cash basis feel to the P&L because they don't want to recognize for their own management, they don't want to recognize the over and under billings. They want to see them as two separate things. So what I do is I just do a journal entry where I debit my under billings and I credit my AR, and then we're going to see it here very simply, right, in the reports, right? I got what I actually recognize, and then I have my adjustment for cash basis income. This is optional, right? I find myself doing this when my clients don't want to see, but when I have to report in working in a percentage of completion, but my clients don't like seeing it that way, so they want to see what I call a modified cash basis profit and loss that has both elements in it. So that's the whole concept of over and under billing.